Just before the break, we were taking on board your queries and we were also discussing domestic global funds. They have a bit of an international exposure to them, and this category of funds has certainly done well. In fact, the Motilal Oswal Nasdaq fund is coming very close to being one of the best performing funds in India, with the last 5-year CAGR being in excess of 16%. And there are lots of equity mutual fund managers out there who want to ride the wave. One such fund is the Kotak Pioneer Fund. The NFO is currently open and it closes on the 13th of October. So let's then take a look at what exactly is this fund about, where will it be investing, and of course, what are the minimum multiples by which you as well can invest, what sort of costs will be involved. So it's an open-ended equity scheme, and it is going to be investing in pioneering companies, which means companies that are talking big time about essentially technologies, processes, and other things. So it is going to be identifying these different technologies, different products, different processes, and the fund will be grabbing such companies into its own portfolio. Also, it's a domestic global fund, which means it will be investing in companies abroad as well. The fund manager is Harish Krishnan. The NFO, by the way, closes on the 23rd of October. Entry load is 0. However, there is an exit load. If you redeem this fund within 1 year, it will be 1%. But if you redeem the fund after 1 year, then there is no exit load either. However, be wary because the riskometer of this fund is high. So it may not be the best product for those investors who have a lower risk appetite or want to play it safe in any manner. So let's talk a bit more about the fund, since this is our Meet Your Fund Manager segment, and bring on board Harish Krishnan, the Senior VP and Equity Fund Manager at Kotak AMC. Harish, it's always a pleasure having you with us on the Money Show. Very different fund, very unique fund. You're going to be investing in very niche companies as well. So tell us a bit about the Kotak Pioneer Fund.
The way we define a pioneer in India is slightly broad-based. We are essentially talking about 3 or 4 key attributes of a pioneering company. Companies that that either launch a new product or a new service line which addresses a completely new category. You can have companies that continuously are increasing their market share in a highly competitive landscape in India. They are doing something different. They are doing something on a strategic front. That is what is leading to these market share accretion over a period of time. So therefore, those need to be studied further. It could be a completely different innovative process that gives these companies a head start in terms of a massive competitive advantage, due to which they can continually improve their margins. Or they could be companies that are better at capital efficiency and seeing an improvement in their metrics. So essentially these are companies, if I were to use a cricketing analogy in India, these are companies which are batting from the front foot, trying to usher in the change, try to set the agenda, following which competitors try and come in, and by then the company moves ahead into some other completely new category. So we've identified about 120 companies in India, from which we propose to select about 35 to 50 companies in a thematic, in a multi-cap fashion, on a diversified scale across sectors, across market cap, etc. And clearly, from a talk of technology and talk of innovation, etc., nothing is complete without discussing what's happening in the rest of the world. And we are just not talking about the Facebook, Amazon, Google, or the Netflixes. There is a whole world which is out there, which is massively investing into technology. And sitting in India, we are at least 15-20 years behind what is happening out there as far as these trends are concerned. And therefore, we propose to invest up to 35% into a fund which is purely into technology, which will be a global tech fund. It will obviously have some names of say the Facebook, Amazon, Netflix, Google, etc. But there's a whole world beyond that, be it in robotics, be it in biotech, be it in payments, be it in gaming, be it in social media, analytics, etc., etc., etc. So, so essentially, Kotak Pioneer, therefore, you get the benefit of companies which are differentiated within India, trying to usher in trends, try to usher in new business models, trying to capture the mind share and the market share of people in India. and a diversification option for the Indian investors who want to look at options of global technology, and therefore it aids in diversification from a typical mutual fund folio. So that's the entire concept of the Kotak Pioneer Fund.
All right. Harish, just to better understand it, based on what you've told me are your parameters, very strict parameters as well, Harish, at this juncture, so that our viewers as well understand it better, if you could share some examples of which sectors fit your very strict parameter of what will enter the Kotak Pioneer Fund.
So, obviously this is a bottom-up exercise. So even in sectors, for example, you can have companies even in FMCG where there can be innovative companies which bring in a completely new category. You can have, say, in a sector like real estate, which is kind of the most hated sector at this point of time, to companies which are bringing in a completely new business model, have a corporate backing, have access to capital, have access to land banks through their joint development agreements, and more importantly are household brands which customers trust far more in this kind of environment. So broadly when we look at it, we find companies in the Indian basket, more so in financial services, especially on the retail oriented franchise as well as on the non-bank side. We find companies in the auto ancillary and the manufacturing side, where there are a lot of companies which have charted out very different paths to try and gain market share in their respective sectors. Two companies in the retailing, two companies in the specialty pharma, specialty chemical space, two companies in the consumer appliances space. So these are broadly these sectors from an Indian basket, which one would see a lot more of names. Of course, from a global perspective, it is a pure technology stack out there. So that those will be the broad sectors that we will look to invest in.
Okay, Harish, you mentioned global companies as well, but the fear over there is the entire rupee volatility. Now, of course, if rupee depreciates, then it's good. But how do you essentially manage the entire rupee volatility then?
Obviously, we live in interesting times wherein a tweet by, say, the president of the US generates that much amount of volatility, and therefore an exposure into a global kind of a cutting edge technology giants that we are talking about will induce some amount of volatility. But I think it is important to understand that when you are getting into an asset class like this, there is a correlation coefficient which is very different from a typical portfolio that an Indian investor invests in. That correlation coefficient can actually nullify a lot of volatility. Let me give you an example. For example, in the last 18 months in India, what we have seen clearly is 3 or 4 big sectors holding the fort, be it traditional IT services or the FMCG pack, some amount of corporate banks and some amount of utilities holding the fort out here, whereas the rest of the pack has kind of corrected quite reasonably well. Now, in that same time frame, despite a heightened volatility and tweets by the president almost on a recurring basis, you've got the currency depreciating, which is kind of offset some of the losses that the Indian portfolio would have seen, and you've got some kind of gains from the offshore portfolio companies in, say, dollar terms, that again kind of offset. So there are quite a few moving parts which kind of in some form there is some amount of autocorrect feature, if I can use that analogy. But this will be the only other way to manage volatility is to diversify your holdings, and both in India we propose to have, say, 35 to 50 names. The overseas fund also has about 50 to 60 names. So it's two diversified pools of funds, and overseas it's also while 80% is in US stocks, they also have exposure to, say, Japan, they also have exposure to Taiwan, Israel, Germany, etc. So there is some amount of diversification from that point of view as well.
Okay. Now, the risk factor, however, is high. So is it not suitable for people who perhaps don't have that high risk-taking capacity?
The analogy that we keep giving is obviously asset allocation is the first and foremost mantra for any individual. And if one were looking at a basket of mutual funds, and if we were to have an analogy of, say, a thali that people are eating, this fund is definitely not the main course. The main course has to be your traditional multi-cap or your traditional large cap funds, which are all weather, across the time horizon kind of compounders. This is an aggressive fund. This is more like a dessert in a thali that you would want to consider. So it brings in more than the return potential. While the return potential is definitely higher, I think it brings in the benefit of diversification, which is often overlooked in our constant comparison of funds, or in our constant endeavor to be possibly in the top performing funds. We kind of ignore the benefit of diversification into different asset classes, and which is where I think this fund actually helps the investor in getting into a completely different concept, a concept which obviously companies which improve mind share, which improve market share over a period of time, it will increase their profitability and the profit pool opportunities over a cycle, and that is what we intend to capture. So companies that are just surviving today, I think will become more and more irrelevant. You just can't just be a survivor. You need to constantly be at it. The treadmill is moving very fast for Indian companies. You need to be constantly be at it to try and be more relevant to your customers. And if you're just going to have a legacy business model or and be complacent about it, I think in a blink of an eye these days your business can be taken away, and that is what we are increasingly witnessing. So therefore it is an aggressive fund without a doubt, but one needs to view it from an asset allocation lens and view it accordingly in terms of the diversification both within India, as well as more importantly an option to invest outside India.